Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing that is all about survival and staying on the right side of the rules. You know, some companies are fighting tooth and nail to keep their heads above water, and this one just got a big thumbs up from its stock exchange counterpart. Stay tuned to find out who it is and if this is a sign of things to come. Before we dig in, if you enjoy these kinds of straight-to-the-point corporate breakdowns, make sure you're subscribed. And hey, we've got a fantastic community over on Discord, link in the description, where we chat about these things and more. We were talking about Lunai Bioworks Incorporated, and their latest report, a Form 8K, is essentially a heads up that they've cleared a hurdle with the Nasdaq stock market. Think of it like this: if you were playing a video game and you finally beat that really tough boss that was blocking your progress. That's what has happened here. So, what was the problem? Back in April of 2025, Nasdaq, which is where their stock is traded, told Lunai Bioworks that their stock price was too low. Specifically, the price had been below $1 for 30 days straight. This is a big deal because Nasdaq has rules like a minimum price to make sure companies are seen as stable and attractive for investors. If you don't meet these requirements, you could eventually get kicked off the exchange, which is pretty much the worst case scenario for a publicly traded company. It means investors can't easily buy or sell your stock on that exchange anymore. But here is the good news: the company has been working hard, and for the last 11 days leading up to October 14th of 2025, their stock price has been $1 or higher. This means they've met the minimum price requirement again. Victory lap: this notice is basically them telling the world, we did it, we're back in compliance. This is a really positive sign for the company and its investors because it means they get to keep their spot on the Nasdaq. Now, when they talk about their common stock, they're referring to the basic ownership units of the company. Imagine buying a tiny piece of Lunai Bioworks Inc. That is what common stock represents. The value per share is what matters for these listing rules. And just to make sure everyone hears the good news themselves, they also put out a press release on October 16th, the day after they got the official word. This document we're looking at incorporates the press release. It is like saying, we've solved the problem, and here is official proof. And who signed off on this important announcement? David Weinstein, the Chief Executive Officer, also known as the CEO. Hez, the top boss guiding the ship. Him signing it means this is official company business, and Hez taking responsibility for it. So let's break down what this all means. This filing isn't filled with a lot of juicy financial numbers that show profit or loss, but it's incredibly important because it is about the company's fundamental ability to exist as a publicly traded entity on a major exchange. Think of it as a health check. A company's stock price can dip for many reasons. Maybe a new competitor emerged, or a product didn't launch as planned, or perhaps the overall market sentiment is down. For Lunai Bioworks, the problem was as simple as the stock price not hitting that $1 benchmark. The fact that they've recovered from it is a testament to either market forces correcting themselves, or perhaps some internal efforts to boost investor confidence or secure new funding that helped stabilize the share price. It's positive news that signals stability and removes an immediate threat of delisting. For investors, this means the investment remains on a major exchange, making it easier to trade and removes a cloud of uncertainty that was hanging over the company. What does this tell us about Lunai Bioworks' direction? Well, it shows they are fighting to stay listed and potentially to grow. Recovering from a minimum bid price warning means they are likely focused on operational improvements or strategies that the market is responding to positively. Without more financial data in this specific filing, it is hard to say if this is a sign of a booming business or just a company managing to kick the can down the road. However, staying on Nasdaq is crucial for attracting future investment and for the liquidity of existing shares. The biggest risk, of course, was being delisted. That risk seems to have been averted, at least for now. An opportunity here is that if the company can sustain this higher stock price, it might signal a broader turnaround in investor sentiment, potentially making it easier to raise capital in the future if needed. In conclusion, Lunai Bioworks Incorporated has successfully navigated a critical compliance issue by regaining its minimum bid price on the Nasdaq. This is a significant win that secures their listing. While this filing doesn't give us a deep dive into their financials, the immediate takeaway is one of stability and renewed compliance. It is a good sign that the company is actively managing its exchange requirements and that the market is responding favorably. What is your take on this news from Lunai Bioworks? Do you think this is a sign of a stronger company or just a temporary fix? Let us know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate insights. And don't forget to join our growing community on Discord where we break down these filings even further. Thanks for watching, and we'll see you in the next video.